glad to have you here. Glad you could make it. One thing about TBP Pinnock, we're not that far removed from a small business ourselves. Just a few years ago, we were a small business, so we understand what it's about. We understand the difficulties of being a small business, and we're here to help you get past those difficulties. And we have a lot of good people on board here that can help you with that. So anything that you do need in the future, you'll be getting introduced to some folks today that can definitely help you out with your business prospects as you're moving forward. And hopefully some of that moving forward is with TBP Pinnock.
This is for you, not necessarily just for us, but to help you guys grow your businesses and be successful. So again, welcome. Call me, I'm available, and enjoy the day.
I'd like to introduce Sam Quigley. Sam is an insurance broker with Barney & Barney. They are the broker representing with TBP Pinnock as a client. And what we thought we would do today is take a high-level trip through an insurance program, insurance issues that might be specific to small businesses. As you're well aware, we could spend all afternoon talking about insurance, and it's so exciting that we thought we might save that for another day. With Sam and his introduction, he will then be available afterwards for questions and any individual questions that you might have.
Thank you, Chris and TBP Pinnock, for having me out here today. And I've been with Barney & Barney for 7 years now, and over that time I've had an opportunity to work with contractors in various stages, from smaller startup companies up through kind of more sophisticated risk management accounts. And so kind of what I wanted to do today was give you a perspective of some things that some of our more sophisticated clients do well, and maybe some of the challenges that startup contractors have, not only with purchasing their insurance, but also some of the things outside of just the policies in terms of implementing and managing the process. So in terms of what I'm going to talk about today, I just wanted to again go through some quick tips about purchasing your program and some things that might help you out during that process. I'm going to touch on some of the basic insurance requirements that you typically might see under your contracts, and oftentimes that's the base of what your program, how it's structured, and what coverages you buy. I'm going to speak a little bit about some of the things that you can do, some of the cost drivers that obviously affect your premiums both on a short and a long-term basis. And then another thing is insurance cost bidding. I think this is a challenge for a lot of contractors in terms of budgeting for their insurance costs in their bid and making sure that you actually allocate enough premium in there to compensate for the bid. And then lastly, limiting your contractual risk. I do want to touch just real briefly on some of the contractual side of things, both upstream and as you transfer that to your subcontractors. In terms of just buying the insurance program, I'm assuming the group here probably has a basic understanding, and most people here probably have purchased an insurance program at some stage. But it is really important, especially in construction, to find a broker who specializes in construction. There's a lot of really good brokers here in San Diego. Barney & Barney, other brokers, there's some really good brokers out in town. And I would suggest interview a few different brokers, find somebody that's a good fit for you in terms of where you are from a size standpoint, as well as somebody who can help you with some resources and templates to help you grow as you get larger. The second bullet point, I really believe our business is very much about trust. And I think you need to find somebody that you trust to work with, and that in turn, that you trust will go out into the marketplace each year and shop the market, drive competition, make sure that they're driving premium and terms and conditions. I think there's a time and a place to get quotes from multiple brokers, but as long as your broker is really showing you options and explaining the different options, really you should look at them very much like your accountant or your attorney. The third point here, having all your policies renew at the same time. This sometimes goes overlooked, but it is important because some carriers will only quote accounts if they can quote multiple lines of coverage. So one recommendation just in general is to maybe try to short-term or write long-term policies so that you can open up more markets. Lastly, read your policy. I think as a contractor, it's really important to understand your limitations and the coverages under your policy. If any policy I was to suggest you actually take the time to maybe go through the endorsements, it's the general liability policy. There's oftentimes a lot of limitations that you may not understand, and ask your broker for help in terms of explaining that. When you're going through the proposal, don't hesitate to say, what is this limitation? I don't understand it. Or take the time to go through the endorsements after you get the policy and ask questions. in terms of your contract requirements, I mean, I'm not going to go through this in too much detail, but probably the most important point here is that when you're structuring your insurance program, it's very important to get the insurance requirements up front, or when you're bidding new jobs. I can't tell you how many times we have clients, after they bid a job, say, well, there was a pollution requirement, or there's a professional requirement, or we need excess coverage. And it's very difficult to go back after the fact. So it's important to have those contract requirements up front and give those to your broker ahead of time. From a cost control standpoint, I mean, you guys have probably all heard what I'm going to talk about today, but really there's two sides of this equation. Really it's preventing losses on the front end, and it's a small contractor. I understand people, you're trying to conserve costs, but it is important to put some money into your loss control and your loss prevention program. At the same time, I would really recommend from a small contractor standpoint, try to develop procedures that are practical. I'll go into a client's office and I'll see them with these huge manuals that are fantastic and they look great and they're OSHA compliant, but they never really use it and they don't know how to implement it with any of their field personnel. So, it's important to obviously spend the money to do it, but make sure that you can actually implement the program. The other side is the loss control side. And my biggest recommendation here would be to make sure there's somebody in your office who takes the time to actually work on the claims. As you grow, as you get into a certain size, you may be able to rely more on the carrier, more on your broker, but in the early stages of a company, there's just probably not enough premium or revenue there to get a whole lot of help. And it's really important that somebody in your office takes the time to manage those claims, because it will come back and really affect the cost drivers of your premium, such as your experience modification. I'm sure most of you are familiar to some degree with that term, but it's basically a comparison of you versus your peers and how you've performed from a loss history standpoint. So you can make that a competitive advantage. You can't control what the market's going to do. The rates are going to fluctuate. They may go up, they may go down. The only thing that you can control is your own experience. And those are bottom line dollars that you can save if you can work yourself to a credit mod. From a bidding standpoint, this is another area where I think small contractors sometimes overlook some of the true costs that they have in their insurance policies. The first point, definitely discuss the market trends with your broker. You may be bidding a project that's 6 months from now, and if your policy renews in the next 3 months, it's really important that you're adjusting those rates and what you're putting into your bid, because the work's going to be performed in the next policy period. So get out there, talk to your broker. Your broker obviously needs to be proactive and discuss that with you as well. And if you're not getting that, you may want to look elsewhere. But very important to adjust for the work that will be done in the next policy period. Then understanding how each policy is rated. Some policies are non-auditable. Some of them go up but don't go down depending on how it audits out. And it's just really important to understand how each of those policies work and how you could potentially have additional premiums at the end of the year. And then from a net rate standpoint, this is definitely something that I think a lot of people overlook. Oftentimes when you're delivered your proposal from your broker, it's going to show the policy rates. Well, a lot of times the policy rates don't include things like taxes and fees. Did you finance your general liability policy? There might be another 6 or 7% in that finance charge. Waivers of subrogation, you might be looking at another 5%. So, if you're looking at just your base policy rates and that's what you're plugging into your bids, there's some additional costs. You may want to have that conversation. What else do I need to plug in here to really find out what my true costs are? I mean, I would say if you're financing your policies, you may be looking from anywhere from 5 to 10% on top of what you're seeing on your policies as your true net rates. I've already talked about the fourth bullet point there in terms of obtaining your insurance requirements early. OSIPs and CSIPs, I'm not sure how many of you have participated in wrap-up programs, but basically the difference between a wrap-up and traditional insurance is that under a wrap-up program, there's a master program that would cover any of the contractors that are participating in the program. And I could spend a whole day talking about how those bids work and how you need to adjust your bids, but to be honest, each one of them works a little different. And it's really important to understand when you're bidding a job, how do I adjust my insurance costs that go into this job? Because sometimes they'll use deducts, sometimes they want to bid net. So there's all these different ways, and you just need to make sure you're doing that research before you turn in your bid. From a contractual risk standpoint, it's amazing to me sometimes when I hear contractors, especially on the smaller side, and this may be a little bit more on the residential side, but I often get the argument from clients, well, why read the contract? I can't change anything in it anyway. My clients aren't going to work with me. Well, I really disagree. I mean, I know that some of it, there is a leverage point, and there's obviously larger contractors have more ability to leverage. and change things, but there's certainly, I see clients of mine who are able to work with their clients and negotiate contract requirements, both from an insurance standpoint and from the indemnity language, and that's the other big one, which you all know well. I would certainly take the time, maybe invest a little bit of money to work with an outside counsel to figure out a procedure of how am I going to limit my indemnity language. There's some simple wording that you can put in there that any attorney can work with you to make sure that you're at least limiting your risk to stuff that you contribute to, as opposed to basically taking on anything under the sun for every sub that works on the project. A lot of insurance policies, especially smaller ones these days, have insured contract limitations, which means that the insurance policy is basically saying we're only going to cover up to this point. So you just need to understand, if you're signing those broad form indemnities without any pushback, it's very possible that you're signing more than your insurance policy will actually respond to. From a risk transfer standpoint, always have written contracts with your subcontractors. It's very important to understand that the certificates you obtain from your subcontractors, all those endorsements that you receive from each subcontractor, they only apply as they're required by written contract, or the majority of the time at this point. And so if you don't have a written contract in place with your subcontractor, both passing through the requirements of the GC or the prime contract, you potentially could have a worthless piece of paper in that certificate because it has to be triggered by the contract. And that really goes to the last point of developing a written subcontractor certificate program. Work with your broker. They typically will have some templates that you can use to send to your subcontractors. I know TBP, we've worked with them developing theirs, and it's just a very important thing. And just as I was talking about with the insured contract, a lot of insurance policies these days are actually requiring that you collect certain things. So it's very important to know what the penalties are if you don't, and to figure out a program that works for you to collect those certificates and keep them. Wanted to talk about a few different things that I see in the different contractors we work with. I think my biggest message, probably in summary, is that as you're emerging and as you're growing and starting up, I can always tell the difference between a client of mine who takes the time to understand their insurance policies, who takes the time and has a kind of top-down approach from a safety standpoint. It's amazing the differences we see in terms of how they perform. And it's worth investing the time and the energy to develop those procedures, and you really have to take some ownership, especially when you're kind of in that startup phase. And you will see the benefits of that in turning your insurance program from this big hassle, which I know everybody in this, everybody here, insurance, it's a necessary evil, it's not everybody's favorite topic, but you really can turn it into a competitive advantage if you do it well. So, and employees, they should have a policy which has the ability to do that. And is that something that's a requirement of your company, or that you're being required by your owners?
Trying to push this to get another casino.
Oh yeah? How's it working?
C. Tassin. Well, then, modular building concepts.
I was? I never
He's my host.
Yeah. I never won anything.
Tom Moore. A winner.
All right. I want a bumper sticker.
Only valid if you wear it.
Oh yeah, where are those bumper stickers?
I can get you a bumper sticker for your truck if you want to.
Okay. But you get to pick something here.
That's an extra small.
That'd be too small.
Okay.
Or a TBP. That's nice.
Those are nice. It has a.
Hats are nice.
It fits.
Oh, see.
Now you gotta take
guy.
it.
Now you have to take it.
It looks-